This is the Hacking Real Estate Podcast, Season 2, Episode 9.
Make sure you got enough coverage. Make sure that your replacement cost can rebuild the property. That is the worst thing that happens to people is when they wake up and realize, man, I haven't looked at my insurance in 5 years, right? Take out that deck page, take out the policy, give it a quick read, make sure you're good with it, make sure you're comfortable with it. That is the biggest piece of advice I can tell people.
Welcome to the Hacking Real Estate Podcast, where we dive into the stories of seasoned, hands-on, and tech-savvy real estate investors. We'll learn the strategies and tools they use to maximize returns and minimize hassle, all while navigating the rapidly changing real estate market. I'm your co-host, Brandon Hall, and managing partner of Hall CPA, and I'm sitting alongside my co-host, Vikas Gupta, CEO of Azebo. With our combined 15 years of experience in real estate investing and entrepreneurship, we're here to help you up your real estate game. Let's get hacking.
Hi, everyone. Welcome to today's episode of the Hacking Real Estate Podcast. Our guest today is Aaron Letzeiser. Aaron is the co-founder and chief operating officer of Obie, a venture-backed insurance and risk management technology platform serving the 17 million real estate investors in the United States. Prior to founding Obie, Aaron started and grew successful companies that he's seen to an exit. In addition to his work at Obie, he is an active real estate investor and a venture partner at the San Francisco-based VC group Pioneer Fund. He graduated from Michigan State and was named to the Forbes 30 Under 30 list. Aaron, welcome to the show.
Thanks, guys. Glad to be here.
So in your own words, can you tell us a little bit about your real estate journey?
Yeah. I mean, I got started investing in real estate. My brother, who's now my co-founder at Obie, actually, his background was real estate private equity, and right around the turn of the market, he cut his teeth in office and retail. And right around 2008, 2009, when everybody else kind of went through their experiences of the downturn, he figured people didn't always need a place to shop or work, but they always needed a place to live. And that's something that I think has always really stuck with me over the course of probably the last 8 to 10 years since I've been investing. So we started investing together. He spent a lot of time in the multifamily space. I started to dip my toes in as probably a lot of your listeners did, right? Which is, you buy your first condo, you put a lot of sweat equity into that place. You're really proud of that first condo, and you decide, hey, like, market's not too bad. Why don't I put a renter in here when I go and I buy a first starter home, right? And then just kind of continue that journey. So that's really where it started for me. And I will say that that first rental unit, like most, was probably the most stressful, right? That's the one where you're trying to figure out how to screen tenants correctly, where to post things, who you're getting through the door, how to build that process, how to do the work, the walkflow or the walkthrough, and make sure the tenant knows where the fire extinguisher is. I appreciate that on the insurance side. So that's really where it started. And then from there, continuing to get comfortable, picking up some additional units, primarily around where I lived, felt a little better investing in areas that I knew, and then slowly continued to get more comfortable in the space, started investing opportunistically in other emerging markets that Ryan and I felt were pretty attractive.
And where are you at today?
So today we've, I would say running Obie has been our primary focus. So we've actually whittled things down, at least for me personally. We're down to probably 8 to 10 units at this point across like the Midwest and then the Carolinas. A place that I'm still super bullish on. I frankly don't have the time to be putting into trying to go out and scour the market for those assets. So we're buy and hold investors, primarily. Holding on to stuff long term, and getting comfortable with where we think the markets are going to be at and how we can continue to optimize those assets in the markets that are emerging.
I know Brandon's a big fan of the Carolinas.
Nice.
Yeah, I live in Raleigh, North Carolina, and I have I've got 25 units in North Carolina, so big North Carolina fan. Yeah.
I mean, I love everything around that area. I mean, Raleigh-Durham's obviously grown a lot. The Greenville area. Ryan, when he first got it started in his multifamily career, he was living in Charleston. And there was a 10-unit building in Charleston that we back in 2011, 2012, we just couldn't get comfortable enough with it. Right, Brandon, we're like, man, it feels a little too expensive. And the thing has like 3 or 4x in the last like 8 years, right? Like it is the one deal that we constantly kick ourselves on that we're like, man, we were too young, too green, and like just couldn't get over the mental hump of thinking that it was just a little bit overpriced. But man, yeah, I love everything about the Carolinas. I think that it's a market that's going to continue to have really nice appreciation over the next couple of years.
Yeah, I bought a 3-unit property in Hickory, North Carolina, back in 2015 for $91,000. And Hickory, North Carolina is like nothing to write home about. I mean, it's like, tertiary, not much going on. But that property is now, it's tripled in value, which is incredible. I'd never expected it. So yeah, North Carolina's had a pretty good run here as of late. I've been happy with it.
Do you know the halfback phrase?
No.
I only heard this when when Ryan was living down there, but only from like a certain communities folks. So you had a lot of folks that were in the north, right? They start to get to an age where their kids are grown up, they're moved out, they want to move down to Florida. They get down to Florida and they're like, wow, I can't do Florida, right? It's too hot. And then they make it halfway back, right? And the Carolinas, right? I don't know. Maybe Ryan coined that term. He's going to have to trademark it. But yeah, like halfbacks, right? They made it halfway back to where they're at, and people love it. I mean, everybody that we know that's down there has just really, really enjoyed the climate. There's a ton to do. You got a ton of research institutions that are down there. Like it is a prime spot for real estate investing, even still to this day.
So in the Raleigh area, there's like a subset of Raleigh called Cary, North Carolina.
Mm-hmm. Yep. Yeah.
And I don't make this joke, but some people make the joke of it's the centralized area for relocated Yankees. Cary, yeah. So maybe there's something to the halfback theory that you're talking about there.
Nice. That's great. Yeah, no, I love it. It's a great market. We still got some stuff in Charlotte, North Carolina. Back when like the uptown area of Charlotte was like just starting to really develop. It's great. You got a bunch of like bankers and finance professionals that are never home. So you go into these units and you're like, wow, the thing looks like the day you guys moved in if you never used a stove. That's great, right? Like that is that's the ideal tenant.
So you mentioned before we got onto this like diatribe, you mentioned that as an insurance guy, you like to know that the tenants know where the fire extinguisher is. What's like a common mistake that landlords make when it comes to insurance? Perhaps it's like maybe the top 3. I'm sure you have several. So let's walk through some of that.
Yeah, I mean, since I already gave you one, I like making sure that the tenants are aware of the safety items inside of your place, right? I don't think hopefully it doesn't come as a shock to any of your listeners. If you're a real estate investor out there and you're listening, like you'd be surprised by anything that some of your tenants can do. But both from my own experiences and just as a somebody running an insurance company, uh, there are a lot of people that are moving into your houses that are apartments, whatever they might be, your rental properties that have no idea and have never used a fire extinguisher a day in their life, right? And so their immediate reaction is to run out the door instead of grabbing the fire extinguisher that's like 2 feet away from them, next to the stove, underneath the sink, pull the pin, spray it on the fire, right? Like take care of the fire. But I mean, there's a lot of people that just they've never done it. They don't know where it's at. I think as landlords, we take advantage of the idea that people should have like that common sense, that knowledge base. So that's the first one. I would say on a more like technical basis, double checking your replacement costs on an annual basis. That's the biggest one. I think both as a real estate investor and just an insurance person. As inflation costs go up, as prices continue to rise, making sure that the price per square foot that comes out to is something that you're really comfortable with, that you can rebuild the property. Because what you don't want to have happen, which I think happens to folks a lot, is you bought your property 5 years ago, you got your insurance 5 years ago, and it just continues to renew, right, with whatever carry it is. And one day you find out that like, wow, I could rebuild that place 5 or 10 years ago for $85 a square foot, and I definitely can't do that anymore. And the worst, right? Like the worst case scenario is that you have that total loss, and you look at the total amount of the limits that are on there, and the bank who also owns your mortgage, they just say, hey, listen, just cut me a check for my portion, right? This isn't enough to rebuild the home. Just give me what I'm owed, and they walk away, right? So you're getting maybe 30, 40%, depending on how much equity you have in that place. You're getting that percentage of the check and then a burned out piece of land, right? That you gotta clear out, you gotta remediate, you gotta rebuild, and there's not enough there, right? And like that's the worst case scenario for folks. So, those are my two biggest things: making sure that you're taking active steps to mitigate anything that might end up happening in the property. You don't want to make a claim when you don't have to. You can't control the weather, you can't control a tornado coming through, but you can at least try and make sure that the water or the fire incidents in the property can be taken care of. And then, I mean, heck, if you're paying for the insurance, make sure you got enough of it, right? It might hurt your bottom line a little bit for an extra 50, $100, but there's some other things you can toy around with. You can play around with the deductible. You can get comfortable with your insurance, but make sure whatever you're paying for on that insurance is actually going to cover the bill in the event the entire place burns down.
Explore Azibo for a streamlined approach to property management. Our comprehensive platform simplifies every aspect of managing your rental units. From diverse rent collection methods to finding and securing high-quality tenants through smart applications and thorough screening, Azibo has you covered. Benefit from state-specific digital lease agreements, tailored accounting, tax tools for property owners, and an efficient maintenance request system. Plus, enjoy substantial savings with affordable property insurance tailored to your needs. Embrace the smarter, cost-effective way to manage your rental properties with Azibo. Join our community of savvy property owners and start for free at azibo.com. That's AZIBO.com.
So you used a couple of more technical insurance terms there. For those who may not be as familiar, can you tell us a little bit about replacement costs versus what else they may be quoted on, just so they know that when they see two policies and one is two quotes and one is like wildly cheaper than the other, what's going on there?
Yeah, I mean, to be as like overly simplistic as possible, and the caveat that like read the policy doc, right? Talk to your agent, find an agent that really specializes in this space. Replacement cost is that's the limit and the amount of insurance that you and the carrier agree is the amount that it's going to take to rebuild that property, right? So if you're looking at it, you're taking that total limit on your policy documents. It might be labeled as coverage A. You want to divide that by the total square footage in the property. And if you're seeing anything less than $120 a square foot, you gotta ask yourself your own comfort level question, right? Are you an investor that's trying to preserve a little bit more cash flow? You're willing to take that risk this year? That's okay. But there's probably not a single property that you can rebuild in the US that's below reasonably $120 a square foot. And that's taking into account, some of those extra construction costs and that inflation, some of that remediation that you might have to do to clear out the damage before you actually start repairing the property. The other one in a really simplistic way is actual cash value, right? Think of that as something happens, I'm just cutting you a check, right? I'm not involved in the repairs or the other things that might actually happen. As simple as it sounds, like you are getting the actual cash value for what you and your insurer agreed upon. And that may end up, depending on how you want to structure it, that could be, pennies on the dollar for what it might take to rebuild it. But you've made the decision based on your strategy as a real estate investor that you're okay with just getting that check. And that's something that is, you mentioned, it can have a material impact on the overall price of that, right? So getting really clear on that, and again, working with an agent that specializes in this space. There's a lot of them out there, but it's not always the person that's just doing your home and auto, right? You really want to understand things from a perspective of a business owner as a rental investor, and the nuances of that policy.
Yeah, tell us a little bit more about that. Like why? I mean, you've given us a little bit, but if you could get like more specific about like, I got an agent. I've been buying insurance from him for, call it 10 years, buying my home, buying my auto. He's taken good care of me, knows my family. Like, why shouldn't I go to him for my investment property?
Yeah, I mean, it's a great question. I would say, and there's nothing wrong with those agents. Usually, they do a great job at home and auto and life and umbrellas, right? Like they're taking care of you as the personalized insurance that you need. But I think most real estate investors would agree that they're managing a P&L, right? You look at that as a business. You look at your cost for insurance very differently than you think about the insurance for your home, right? And so because of that, there are agents that are out there that they do a lot of home and auto. And so those are the carriers they have access to, right? The names that you see, paying for Super Bowl commercials. And, more often than not, it's okay coverage, right? It's usually their home product that they've kind of, modulated a little bit so it can apply to this circumstance. But it's not always great, right? And it also doesn't mean that it's always priced really competitively either.
What does that mean? Actually, sorry to cut, but like, what is like okay coverage, but it's not always great mean beyond limits and deductibles? But like, are there like exclusions? Are there endorsements? Are there specific perils that someone who's more familiar with investment property would a carrier that's got a specialized product would make sure they cover?
Yeah, I mean, it's a great question. I think that there are certainly coverages, right? And there's endorsements, there's language, there's extensions of that coverage that I think are really specific to the real estate investor community, the things that you really care about, right? That loss of rental income and the circumstances upon which you can actually collect on that. Enhanced water backup coverage, right? You're not in the property. And so it doesn't always make sense to get kind of like the water backup coverage you might get on your homeowner's policy where you're there, right? You know where the water shutoff valve is. You're going to take care of it. You want something that, well, your tenant looks underneath the sink. It might be a little bit wet. Maybe it only drips once every minute, once every 2 minutes. Not a big deal, right? Like that everybody has that kind of tenant story, but over the course of a year or 18 months or 2 years of that lease, right? Like you're going to have a pretty big problem. And I think people that take a very specific approach to building insurance products for real estate investors recognize the types of environments and types of circumstances that come up. So, in a lot of those main carrier, your very traditional carrier coverages, they got a ton of stuff in there that you actually don't even necessarily need, right? Jewelry coverage for yourself, right? A lot of the home policies now have identity theft protection coverage in them, right? That's the stuff you don't need, but it's driving up your price. And so a lot of the specialized carriers have now moved that coverage into other areas that they can provide you really comprehensive and applicable coverages. But I would say that the broader piece about why you want an agent that works in this space is that those specialized carriers that do things for real estate investors, they really only want to work with agents that are going to send them a good amount of volume, right? Not just like hey, 1 or 2 quotes a month, maybe you bind one, maybe you don't bind any of them. As an insurance company, we want to work with agents that are going to send a decent amount of volume. We want to build a good relationship with them because managing that relationship with that agent is the same whether you're binding 100 policies or none in a single month. And so because of that, those are programs that are very specific to our space. And those are programs that really know and understand the rental market, right? Those are people that are modeling out what those rental losses might look like on an annual basis. And a lot of times it's actually going to result in better than market average pricing, right? Better than what you'd be getting from a lot of the traditional carriers that you might use for your home and auto. That's the benefit at the end of the day. Those are the folks that can really get you into that. And as you start to expand, you get into 6, 7, 8, 9, 10, 12, 50 units. Those are the folks that can also start putting you into a schedule, which would have the same effective dates, same policy dates, right? It makes it very easy to start managing your insurance on a large scale. Those are the agents that are going to be able to do that for you.
Got it. No, that's super helpful. And you actually, towards the end there, you got to something that I wanted to get to. So might as well hit it now. So like, how do my insurance needs change? And how should I be thinking about insurance as I go from 2 units to 5 units to 10 units to 20 units?
Yeah, right around probably that like 5 to 7 unit mark, you want to start having that conversation with your agent. It's really a function of and a strategy, right, around being able to just manage your insurance, right? If any of your listeners are up to that 5, 7, 10 units and they're all on different policies, they all have different start and end dates, and like inevitably you got 1 to 2 different insurance renewals a month. Like that's a headache, right? And if you miss one and then your agent misses it or something got non-renewed, right? Like you could be totally screwed in that situation, right? You just didn't even realize that you hadn't been covered. And then of course that is going to be the unit that you have a claim on, right? Because that is just Murphy's Law. And so that's the first thing. I think the second thing is really around, comfort level and cash flow, right? At that level, you're making a decision about how you want to cover the portfolio as a whole. So each individual property gets their own limits and coverages on a schedule, but the overall policy documents, the things that are going to be added in there, that's really uniform across the policy. So a schedule is really, I have 50 units. They are all going to start my insurance policy is going to start on January 1st. I've got 12 months of coverage. I can add and remove locations to that schedule. And then I have one single bill, right? That is the best thing. And then within that, you can say, you know what? I'm the type of investor where I like comprehensive coverage and I want to know that I can use it. So I'm going to go with $1,000 deductible, right? Or you might decide, I'm somebody that, I'm okay taking a risk because I really value cash flow. I'm somebody that hasn't made a claim in years. And I think the savings that I get from not paying for a higher deductible or some more comprehensive coverage, that is actually money that I'm going to be able to put in my pocket. And I'm going to take the gamble and the risk that I don't have to use it. And if I do have to use it, right, then I've got some of that surplus hopefully building up from that. And so that's the benefit of of insurance at a scale. It does actually become easier as you get larger. And then it really becomes that decision point. I can't tell you how many policies we see from folks where, they've got bare minimum coverage, right? That's what they've decided, but they've got $1,000 deductible. And I'm like, those two don't go together, right? If you're doing bare bones coverage, then like you're betting that the place is going to burn to the ground. At that point, at $1,000 deductible, right? Like, you could be making a claim for something that's $5,000, $10,000, $15,000. Most people, when we've done surveys of landlords, think that they might not actually file a claim until something hits $15,000, $20,000 to $25,000 in actual damage. And if that's the case, everybody who's doing that should be saving themselves money and going to a $10,000 deductible, right? Make that bet because you're going to be able to put more into your pocket. You're going to have a much higher NOI then as you're operating on an annual basis.
Got it. So to tie this off to summarize to make sure I got it right. So once I hit 5 to 7 units, I can put myself on a schedule. What that does is aligns all of my renewal dates, puts all my properties on one form. I get one bill. I get the same coverage or consistent coverage. And I don't have to deal with the headache of making sure that, all my coverage is up to date across all my properties that are with 7 different carriers and have, 4 different renewal dates. And then this carrier is dropping me because that's happening in this market and I got to go shop that. And that massive headache when I get to 5, 7, 8 properties, that all simplifies. And to go back to your earlier point about, why a specialized agent, right? Like, again, correct me if I'm wrong, but some of the more sort of like mainstream personal lines carriers don't even offer the schedule as a product.
Exactly, right. And that's primarily due to the fact that they built their rental product off their home product. Right. All those carriers, they're looking to get home and auto, and then they're like, all right, I got the bundle. Let me try and sell them the rental property, the second home, the motorcycle, the RV, the boat. And so most people don't have 5, 7, 10 primary homes, right? And so they never built the infrastructure to be able to support that.
Got it. Tell me about renter's insurance. Like, why should I, as a property owner, care about whether or not my tenants have renter's insurance?
Yeah, I mean, I would say a couple of reasons. The first is obviously in the event that the worst happens, and that's really what you're cared about as a rental investor, as a landlord. You want to make sure that your tenant ultimately has some coverage. Right. It makes their life easier. It makes the transition into them finding maybe some alternative housing easier. They get their contents covered. That's the first thing, right? At the end of the day, making sure that your tenants are protected. The second thing, and this is a good call out for anybody listening, is you want to make sure that the insurance that that is going to be extended onto that property and onto that tenant is also something that covers the damage that they might also cause on the property. Right. So one of the things that's become very popular over the last, 5, 6 years is you have these platforms that make it very easy for people to go out and sign leases, manage these assets. And insurance companies, especially on the rental side, have tried to keep up. Right. You've had the Lemonades of the world and some of the others. You want to make sure that there's insurance that doesn't necessarily exclude the damage that tenant causes. And I think a lot of the rental carriers have started to, I think, align themselves with that idea, but there are still some legacy carriers that are out there that really aren't going to cover that. So you as an owner, you as a landlord, you want to make sure that you have that coverage, that's the type of coverage that you're requiring inside your lease agreements. That way, in the event that there is that water damage issue, in the event that there is that small kitchen fire, it's the tenant's insurance that's ultimately going to make you whole, and you don't have to make a claim on your primary insurance as well. Those are the big things. The third thing is really the liability on there as well, right? Tenant has a friend over, the friend trips and falls. In the society that we live in, and you can't put it past anybody that they're not just going to sue everybody. The law firm that they find is just going to name everybody. You, the landlord, maybe the property manager, the tenant, anybody that was there, and making sure that that tenant has insurance for some of the incidents that they may cause and contribute to. That's going to help contribute to continue to try and provide some protection to your involvement to that, or at least some protection against trying to pull yourself off of that lawsuit when you don't need to be there.
Got it. So if I'm hearing correctly, it's not enough for me to just have a generic like renter's insurance is required clause in my lease, but I should actually be specifying specific coverages that the renter's insurance policy should cover.
Yeah, I mean that's really best practices today. Most of the renters policies that exist out there, they have started moving in this direction, right? You have something called like a tenant damage waiver, tenant damage liability policy that is getting endorsed into these renters policies. And if you don't want to make your tenants kind of purchase it in that way, or you have tenants that just don't comply, right? Like they're just never sending proof. It's a challenge. A lot of resident benefits packages these days, a lot of insurance providers that are out there now do actually offer a very inexpensive tenant damage product, right? You as the landlord, again, what you care about is your property, and making sure that any damage they cause is really going to be something that they're going to bear the cost on. And so there's very inexpensive policies. Obie offers a policy, several others do, that, for $100,000 in coverage with a, $0 to $250 deductible, it's about $8 a month. Right. And that's something that, for those tenants that don't actually comply with that, you can pass that cost along to them. And then at least the interest in the things that you care about are going to be protected. For $8 a month, you can't beat that.
Mm-hmm. So to make sure I understand how that works. So if I don't require renters or I can't get compliance, I can go purchase this policy from you or from someone else and then just roll that into my rents.
$100 a year that really has no deductible. And that gives, again, it goes back to that peace of mind and that cash flow strategy. It's one of those items that I think can really continue to provide that level of protection. And then you also don't end up having to go and make a claim on your primary insurance, right? Going back to one of the earlier things I said, it helps you avoid making that claim on the insurance that everybody cares about. It's the thing the bank requires you to have. Make sure that you're doing the things you can to keep that price as low as possible.
Got it. So switching gears for a second, I'd love to get your read as an expert on what's going on with the insurance market. So like I live in California. Every week I see headlines of so-and-so insurers pulling out of the market. Obviously, Florida has been a nightmare for insurance for a long time now. What's going on, and what can I do to protect myself, especially if I'm seeing 10, 20, 30, 40% year-on-year rate increases, or I'm just getting dropped?
Yeah, I mean, it's a great question, and it is a really tough insurance market for certain geographies in the U.S. I think the challenge is that the markets that have been most attractive to real estate investors are also the ones that have been getting the probably the largest beating by the insurance market. And the reason being is, it's really a perfect storm, no pun intended, of like a confluence of events, right? You have some weather events that are occurring. You have things like the Texas winter storm that happened a couple of years ago that nobody predicted. You've got inflation on material costs. So going back to what we talked about replacement costs, you and the carrier have agreed this is how much it's going to cost for the carrier to help you rebuild that entire property. Well, if lumber costs start going up 5, 10, 15%, right? The remediation of those properties, labor delays, right? Just in terms of like rebuilding those assets and getting people into queue for that, and carriers paying out loss of rents and business income loss. And then beyond that, the last thing that I think most people don't know about is most of the insurance capacity comes from Europe and comes from the UK, right? It comes from Munich Re and Swiss Re and names like Lloyd's of London. And as the exchange rate in the FX markets for the euro against the dollar or the pound against the dollar, some of these players in the beginning of 2023 were looking at their balance sheet and saying, wow, with nothing else I just mentioned, the inflation, the claims, the weather impact, just because of the exchange, right, and the currency, they've got 5 to 10% less capacity than they thought they were going to have. And so all of that's really resulted in a couple of things. Most carriers, as people know, have been pulling out of Florida. It's a really tough market. One, because of the weather, but two, because Florida has over 80% of the annual claims litigation cases in the country, right? So one state, right? Nobody's going to be surprised it's Florida. I say that with love, but like it's Florida, right? Like the litigation, the state legislature is trying to deal with that, but you have issues like assignment of benefits where was a great idea, I think, in theory. But, if you have one shingle that's kind of knocked out of place after a hurricane, a roofer, and this has been happening a ton over the last 5 to 10 years, roofers would come to your door and say, hey, I'm going to replace your entire roof. I'm going to push it out to your insurance company, sign right here, and I'll take it over, right? You don't have to pay a thing. And then that roofing company goes to the carriers. They know exactly how to work that system. And they say, hey, I replaced Brandon's roof, right? I need to get paid for that. Right? Here's the damage. Here's the exact spot in the policy contract, right? They became experts, and good for them, right? Like that's the capitalist society. They know exactly how to build their business. So that loophole's starting to get closed. And then California is very similar with their own challenges. You have a state where the state, I think very well-intentioned, limited how much somebody could increase premiums by on an annual basis, right? So if you're Travelers or State Farm, Farmers, Progressive, Nationwide, all these groups that have been pulling out over the last 6 months, they're like, hey, Mr. Insurance Commissioner, I got to raise rate by 10%. Otherwise, I'm going out of business. And he's like, well, this is what the law says. You can't go over this amount. And so a lot of those carriers say, hey, listen, I'm out, right? We'll come back in a couple of years. We'll refile our rates. They'll be more expensive at that point, but I can't continue to stick around in the state. And I think the unintended consequence there is, it's people like you now that are really getting hurt by that, right? You have less choice in the market, so it's really finicky, right? It's a really it's a confluence of events all at the exact same time. But at the end of the day, it's the consumer that loses. California and Florida are both going to end up having to create their own state-run, and in many cases they have state-run insurance carriers, and that's a path that I think nobody, a consumer or the insurance market, wants to go down.
So is there anything I can do to protect myself? Like if I'm an investor, like obviously, right, if I'm getting into the market, I can decide. And I've talked to some folks who are like, you know what, like I'm not ever going to invest in any of these areas because I just can't predict the insurance cost. But let's say I'm sitting on 10 assets and I'm seeing insurance just start to like take big chunks out of my profit margins. Like what can I do?
Yeah, I would say that the best thing that you can do, we touched on this a little bit earlier, but control the things that you can control. You can't control the wildfires. You can't control the carriers moving out of the state. You can't control weather events that might happen. You can control, to the best of your ability, the two biggest things, right, that happen inside of your property: fire loss, right, which is a lot of time kitchen fires or candles that are left unattended, and water issues, water backup issues. The inevitable thing somebody threw into the toilet and shocker, the toilet's backing up, right? Those items that you can just try and it's difficult too, but even similar to showing tenants where the fire extinguisher is, showing the tenants where the water shutoff valve is, right? There's a lot of people that have just never even on their toilet turned the valve to the right in the back of it. Like, oh, that's what that thing does, right? And as real estate investors who, most of the investors that I know, probably most of the listeners, we try and fix a lot of things ourselves. So I know that valve is going to turn off the water, but a lot of people just don't know, right? And if you look at the average age of the renter and just life experience and not having owned a home probably in the past for a lot of these folks, it's just not something that they've ever come across. And so those small items are really impactful. Two things that, I would also add, and, we have no interest in these, but we have seen them be effective. The first one is called a fire blanket. You can buy them on Amazon. They're like $10. It's like a lead-based blanket, right? And a lot of people put this underneath the sink right next to the fire extinguisher. You take it out, and it's like a 5 by 5 foot blanket. You can throw that over top of your stove if there's a fire. Should help to either put that fire out or contain that fire. The second item is something called a fire stop, right? This is a magnetic, it looks like a hockey puck, right? And it's a magnetic cylinder that actually connects to the metal vent above your stove or the underside of the the microwave if that's over top of the over the stove. And in the event that that thing feels enough heat from a fire, it will actually disperse a powder, right? Right over top of it. And I have seen really excellent success putting out fires that otherwise would have completely destroyed the kitchen, potentially the home. And if it's an apartment building or it's in a duplex, quadplex, right? That water from the fire department, you're out several units at that point. Those small items, $20, $30 per unit, the fire stop's good for like 4 or 5 years. That is really, really great investment to try and control the things that you can control. And all of that is in an effort. Even that, that tenant damage policy that we talked about earlier, all of that is in an effort to like make sure that when you have to file a claim, it's because it's really worth it, right? Like something burned down, something's really damaged. Otherwise, try and minimize the claims that you ultimately have, because that's going to keep you as a competitive insurance prospects for the carriers that still remain in the state.
Mm-hmm. Yeah, I when I was much younger and renting and didn't know anything, there was like a little drip below the kitchen sink, and I'm like, whatever, it's like a small drip. And the reason I didn't talk to my landlord was actually not because I didn't like. It was like I don't want to be that problem tenant. Like I don't want to call them for every little thing. And then it was like a year later, she was like, "You should have just called me. Like now I got to replace the cabinet."
That's good. I've had a tenant call me because a light bulb's been out, and I'm like, "Let me send you the YouTube video, right?" And I've seen that work. Like I think about this over time, right? And maybe it's out there, but I haven't seen it working in this space, or even on the insurance side. Like there is a market on YouTube for like the landlord, the landlord repair geek, right? Here are all of the top 50 or top 100 things that tenants call about, and really easy, really instructional videos that you can be like, oh yeah, your light bulb's out. I would have thought that was common sense, but let me send you the video, right? I'm not coming out. I can Amazon you a light bulb, right? Thank God for Amazon these days. I can send you the light bulb. You can watch the video, twist it left, twist it right, see if it works for you, right? There is a market for that. I just have not seen it yet. But if somebody did that, I would be using that all day long for some of the emails that we get.
Yeah. Well, there are now some third-party like maintenance management de-escalation services where instead of you getting the call, right, their call center gets the call, and they'll actually be like, you know what, like here's the YouTube video. I'm not going to send out an electrician to replace your light bulb. Do you? We're coming up on time, but gosh, this is like I have so many follow-up questions, so I'm going to try and fit a few in here before we have to wrap up. Do you screen tenants differently as an insurance person? Like some of these things about like, educating your tenant, talk about educating them, but do you actually screen them differently?
I mean, I think I would like to think that I do. But I mean, we have had a tenant that was extremely highly educated, an investment banker, like a lot of really good life experience, probably one of the most like professional tenants we've ever had, would call us about the craziest stuff, right? And so you think that you do, right? I think the only thing that you can really gut check is we're big about meeting the tenants in person where we can, if they're in the city where we have the rental. Otherwise, we have some people that we trust, right? We've got like long-term door people at some of the condo buildings we own units at, or some other people that they feel like they're a pretty good judge of character and the track record's pretty good. Is that person responsible, right? More so than anything else. I mean, can you pay the bills, right? But do you get a sense that they're going to be responsive? Do you get a sense, I much like I think like job interviews. I don't know about you, Vikas, at Azebo, but like the way sometimes people follow up after a job interview, the way that they actually interact during that hiring process, I do the same thing. How quickly did that person respond to me? Did I send them a question about setting up a time to meet? Right? It's the same type of thing. Go with your gut on that. Even if you got to take like an extra week, 2 weeks of vacancy, right? It is worth it sometimes to find that tenant that's gonna pay off for you in spades. How do they interact during that process? And I've even run into landlords that will ask some additional questions that seem very benign, right? That are just kind of, and they just see how people respond and how quickly they respond. and what's the tone of that, of that email and that interaction. That's the only thing that, you can try and use as a proxy, about how somebody's really going to take care of your property.
Got it. So you're not asking people, do you like candles or not?
No, I'm not doing that. I mean, we do tell people that we do insurance for real estate investors. So we're like, it comes up as like a one of those moments that hopefully sticks in their head, right? When I'm like, hey, here's the fire extinguisher. Not trying to insult you, but like, here's the pin, right? You press the thing, it works, right? Fire's not going to burn the place down really quickly. Stay calm. It's all good. I'm in insurance. This is kind of what this looks like. It could be bad for everybody, right? Hopefully that, we try and make that fun and like the humor sticks with them. But no, we're not specifically asking about their, their candle habit.
One more question before we try and wrap things up, if you don't mind. Do you do any proactive preventative maintenance that your typical landlord may not? And as an example, like I've heard of one person I talked to, I'm sure many people do this, but one person I talked to, like he invests in single family homes and he has someone go out and snake the clean outs once a year just to make sure that, like, because he's not going to necessarily know immediately if there's a problem and he wants to prevent that water damage.
So I like that one. That one hasn't come to mind. I would say we do a real deep cleaning of like the oven, right? Like I'm just like, I'm allergic to stoves and ovens being in the insurance industry now. I'm like, tenants and fire is just, I gotta get people to like, it's expensive, but man, if the value add in like nice apartment buildings went to like an induction cooktop or something, like I'm feeling a little bit better about that. At least there's no open flame. So that's the big one. We always do that in between because I mean, the amount of like crud and grease and stuff that ultimately is dripped down into that pan, like in the event that there's a fire inside of your oven, don't help it along by giving it some like kindling. The second thing is we bought on Amazon. It was cheap. I mean, definitely cheaper than if I had this done. We bought like an optical 4K camera, right? And it's got probably like 20 feet. It's a little bit rigid, but like you can move it through. We do that through like the dryer vents and some of the other vents in the house upon like tenant turnover. I've seen tenants that like for whatever reason just dry their stuff all the time, right? Whatever that is. Or I mean, we live in the Midwest. We got some rentals up here. Like we had a tenant that had like really furry blankets, and because it was cold or for whatever reason, I don't know, saving on heat, like she would put them into the dryer just to heat up the blanket and then like cover herself in the blanket. But the amount of like debris from those blankets, and she'd clear out like the lint trap and everything, but like it was incredible, right? And like that's another place that like you can end up having a fire. It's good preventative maintenance, but spend the 75, $100 on Amazon. You will definitely use it for other items. I have used it all the time. But it's like, throw it through the vent, see what it looks like, make sure that all the piping and everything looks good. And you can start to feel a little bit more comfortable with the condition of the house, especially if it's a property that might have had renovations before you bought it. Those people that don't do, I think like one of the good benefits of like dryer vent cleaning and some of the other things that exist out there, jury's out on whether or not it's super effective just in general. But I think after renovation, especially when properties get turned over, whoever did the fix and flip didn't want the added cost. There is so much debris inside of your vents. Getting that cleared out is always a good idea.
Great. Well, awesome tips. I feel like we could keep going, but unfortunately we have to wrap things up. So before we go into our 3 closing questions, you've said a little bit, but give us the 1 to 2 minute Obie pitch and tell us where people can find you.
Yeah. So like I said, started the company with my brother Ryan. We got frustrated with our insurance process. I had my insurance license for a while. I got it in college to hustle my friends for their renter's insurance and their auto insurance a good 10, 15 years ago. It was good beer money on the weekend, but we knew the process was broken. And at the same time, especially on the single and small multifamily markets, there was this gap in carriers that really wanted to spend time there. So that's really what Obie became. We're an insurance technology company that's solely focused on the residential real estate investor. Whether that's a single unit, accidental landlord, condo unit like my first one, or folks that have a portfolio of 1,000, 5,000 homes. We've built technology that provides an instantly bindable rate either through you or through your agent that might want to use this as well. But the biggest piece was providing that visibility, putting the owner in the driver's seat to become the master of their own destiny. I want you to sit there and say, I want to know exactly what the price might change to if I go down to $1,000 deductible. Do I want to add this coverage or remove it? Right? There used to be 10 years ago when Ryan and I were getting insurance, we'd always go back to our agent and be like, hey, can we try these other 50 combinations, right? We just want to see how the cash flow looks. I might want a little bit more coverage if it's actually cheap. And that poor agent's like, no, I can't do this. Not because I don't want to help you, but like my carriers are going to kill me. Because that's a manual process. There's an actual person back there sitting there in front of an Excel spreadsheet running all those models and then sending them out. So that was the biggest piece. We wanted to put landlords in the driver's seat. And I think we've been able to do that. We put about $25 billion worth of coverages out last year, and we're on track to continue to double and continue to try and I think flip the narrative insurance on its head for real estate investors.
Great. And where can people find you?
They can find us at obieinsurance.com, OBIE insurance.com.
Fantastic. All right. Are you ready for our 3 closing questions?
I am. Let's do it.
All right. Number 1, what is your favorite book? And it does not have to be real estate related.
Favorite book. I would say most recent favorite book has been Never Split the Difference. Chris Voss, good book. Good for folks, I think, just in business in general, but I think also in real estate. Really interesting, I think, tips and strategies that he's had, and hopefully I have a chance to hear him talk. He's out on the speaking circuit.
All right. Question number 2. What is more important to you in real estate investing, cash flow or appreciation?
I'm a cash flow person, primarily. I like to know that I'm getting paid on it. That's where I get my return. If I get a small appreciation on the property, fine. But if I can get a return on the cash that I've been putting into that property, and then what I can do with that cash that I get, that's better for me.
Mm-hmm. Great. I like the definitive answer. We get people who try and have it both ways.
Yeah. Can't have your cake and eat it too.
Well, in the past, depending on what time you got in, the past, 15 years have been pretty good.
Yeah, that is true. That is true. And depending on the market, if you're investing from like 2010 through basically 2020, 2021, like you can definitely have your cake and eat it too.
Yeah. All right. Final question. Is there any other piece of advice or insight you'd like to leave our audience with?
I would say the first thing I said on here, right? Make sure you got enough coverage. Make sure that your replacement cost can rebuild the property. That is the worst thing that happens to people, is when they wake up and realize, man, I haven't looked at my insurance in 5 years, right? Take out that deck page, take out the policy, give it a quick read, make sure you're good with it, make sure you're comfortable with it. That is the biggest piece of advice I can tell people.
All right. Well, thank you so much. I hope everyone else is leaving this as much more informed as I am about insurance. Thank you for your time and your insight, Aaron.
Thanks so much.